Hello everybody! Good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. There is going to be a massive move that is coming inside the crypto markets. The direction of that move is waiting to be decided. We have some very important charts that I want to update you guys with. These are going to be the charts that everybody should be paying the most attention towards, especially as we're getting closer and closer towards the bottoming of this entire bear market. We have a very important move that's going to be coming. It's ultimately going to dictate when the true bottom is going to be. Have we already bottomed, or do we still need a little bit more downside before we're there? I'm going to break it all down to you guys in an easy to understand way so that you guys can be the most profitable over these next couple months. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys go ahead and download my free ebook if you're a new guy getting into these markets and you want extra educational content on how to be more profitable, make better decisions. I have a free ebook and a beginner's guide to crypto. Downloads in the description. Free, not going to cost you anything. And with that being said, let's jump right into this amazing video today. Alrighty guys, now one of the big things that I've personally been watching very closely towards is the 50-day moving average. The reason I've been watching this is because it's one of the best trend indicators that we can look at, not only in crypto, but the stock market as well. It's one of the big trending indicators that institutions use, other traders and investors are using, and we can see that it's oftentimes really respected with the price action of Bitcoin. We can see that pretty much throughout this entire period of consolidation, when we're uptrending, this is holding support. When we're downtrending, this moving average becomes resistance, and then vice versa. There is periods of time where we do temporarily peak above and below, as with any indicator. But as a rule of thumb, we can see how the trend of Bitcoin is respected by this 50-day moving average. Now, the big thing I want you guys to remember is when we're looking at the trend of Bitcoin, it's important to understand where we're currently sitting at with this 50-day moving average. Now, as we can see here, from the moment that we pretty much flipped bearish inside of this bear market was right over here at about the end of November. We can see that we became resistance under this 50-day moving average, and then we pretty much dropped about 60% all the way back down to about 30K. From here, we consolidated. We were right at that trend line. We couldn't quite get above or below. We were just grinding on it. We temporarily got above, but we were just more or less consolidating around that. And then we flipped back above. Once again, we broke below. This becomes obvious resistance with a rejection wick right here. And then we go for another 40, 50, 60% pullback right here. And so what we've seen here is every single one of our major sell-offs inside of Bitcoin would have been understood, and you would have been able to spot that early on by simply understanding this 50-day moving average. And so far, each of the last two major drops have been accompanied by a flip of this moving average. We can see the first one was there, the second one was here, and now if you guys look, you'll notice that we are once again below this 50-day moving average. And so as far as what the trend is showing right now, we're obviously below the trend. This is still a downtrend. Nothing has changed up to this point, and it's looking like a retest of the range lows is going to be likely. I'd say that anywhere from about 19,000 down to about 17.5. This is going to be our range where we really don't want to see the market close below. But as long as we're below this 50-day moving average, in my opinion, the trend's down, and it's most likely going to continue to see lower lows and lower highs. Now, the same thing can pretty much be said with Ethereum here. If we come over here and remove our drawing tools, and we're taking a look at this 50-day moving average once again, Ethereum also obeys this average very, very well. In fact, it obeys it equally as good as Bitcoin, but what we're going to see is when Bitcoin shows weakness, Ethereum will show more weakness on this trend. Now, what I find is interesting is over the last month or so, as Ethereum and Bitcoin both rose off of their lows that it stitched in here, what we saw here was Ethereum held up better. It had a much bigger move off of the lows, and it was just holding up better support. We were seeing Ethereum actually holding support above this 50-day moving average. But over the last couple days, we can see that this has flipped, and we are now looking at this being resistance. The 50-day moving average is once again resistance for Ethereum, and so most likely the trend is going to continue to resolve in the direction that's already been. We can see that our last attempt, the holding support that resulted into us turning into resistance, led to our most recent downtrend. And we can see that Ethereum pretty much flipped this 50-day moving average into resistance pretty quickly. We did this around, well, actually, if we're looking at comparing it to Bitcoin, Ethereum held up a little better. It was actually the first week of December that this became resistance. And so Ethereum has actually held up better than Bitcoin throughout this entire bear market. It was actually Bitcoin that ended up going below the 50-day moving average before Ethereum did, which is, kind of makes sense considering Ethereum follows Bitcoin. But they're both following the exact same pattern. The second that Bitcoin flips below the 50-day moving average, Ethereum does it about a week behind. The second that they both do it, they both sell off and make these big moves down. The fact is, guys, we are below the 50-day moving average once again right here. And so as far as it goes for me, I'm looking at the range lows. I find it more likely that if this is going to be resistance, we're going to have to end up coming all the way back down to retest these range lows. And from there, I'm not going to try and predict what's going to happen with the market because there's too many other variables that are going to dictate if Bitcoin and Ethereum break range lows or whether they hold support. Now, one of the big things that we're watching for, once again, I like to compare the prior cycle because even though we might not know 100% what the direction is going to take, we can look at the last cycle time frames and get a little bit of an understanding. Now, this is going to kind of explain a more of a bearish scenario for Bitcoin and Ethereum. I'll explain a bullish scenario as well, but for now we're going to get into that bearish scenario. Let's assume here that this becomes resistance, like it already is. We sell off to the range lows. The range lows become resistance, and we end up going for one more low inside of this cycle. That low would take us to about $600 for Ethereum. I drew this much lower than it would go. It would be just below this previous one that we stitched in here at about June 18th. We would go to probably about $600, which would be all the way back down in this area here. If Ethereum goes for one more low, because it's very possible we don't. It's possible we could just hold support off the range lows. Like I've stated, guys, there's a lot of variables that have to do with the SPX, that has to do with the dollar index. There's a lot of different things that we can kind of watch. But at the end of the day, as long as we're below the 50-day, we should expect to see more downside. Now, I am expecting a move to the range lows, but nonetheless, that doesn't determine whether we hold support, whether we make some type of double bottom formation, because we could see something like that. There's a lot of scenarios in play here, and I'm not trying to predict anything. What I'm trying to share with you guys is the overall trend. Now, one of the things I want you guys to pay attention for when we're comparing the two cycles, if this is going to be bearish, then kind of what I'm looking at, if we're comparing the last cycle, the moment that we flipped and became resistance under this 50-day moving average in 2018 was right here in May. We became resistance, we sold off here, we kind of crawled back over in this range here, we rejected off the 50-day, and then we went for one final capitulation right here. In my opinion, where we're at today, if we're going to be following a bearish scenario of the last cycle, this was where we flipped resistance under the 50-day, and then we made our first sell-off here. In my opinion, this little crab crawl back over to this 50-day is the same as this move right here. And if we're looking at the time frames, from the all-time high of the last cycle to the moment that the 50-day became resistance was 120 days. If we're looking from the all-time high to the moment that this next attempt was also under resistance, you're looking at about 300 days. Right? And then it was about 365 days to our cycle low, right? Which is typical of a bear market. They last almost exactly 1 year. Well, if we look at that exact same formula, from the all-time high to the moment that this became resistance, you're looking at about 140 days, almost exactly on par with the 120 days that we saw here. Now, if we're looking at that again, it was 300 days to the second attempt at a breakout. We can see that this second one was about 280 days. So we're still following right there with those same time frames. This rejection was 120 days from the all-time high. This rejection was 300 days from the all-time high. This rejection was 140 days. This rejection was 280 days. So there is a very big similarity as far as the time frames are going. Now, guys, if you're aware, what happened after our second attempt at a breakout of the 50-day that didn't work? Well, we went for our final capitulation, which was about 60%. If we're looking at that total move. About 55-60% from the high to the low. Now, if we're looking at this once again, from the high of the move we just made, if we drop 50%, you're looking at about 600 billion in market cap, which would be, like I just stated, for Ethereum, you're looking at a drop to $600. For Bitcoin, you're looking at a drop to basically 14 to 12K, somewhere right around there. And then with the total market cap, you'd be looking at about 500 to 600 billion. That's what I'm seeing as far as the bearish scenario. If this is going to be resistance once again, if support can't hold in here, if these range lows aren't our final low of the cycle, this is the type of move that would be coming. Keep in mind, we're on a log scale, so it looks a little bit crazier. It would look like this on a normal scale chart. So that's the bearish scenario here. But the bearish scenario and the bullish scenario all lie upon the SPX and the US dollar market. So we're going to be looking at these because there is a scenario where Bitcoin doesn't go for another low. There's a scenario where Ethereum doesn't go for another low. There's a scenario where the S&P 500 holds support and we actually start going back up again. There's so much volatility inside of the overall market right now. Inside of the world, there's a lot of indecision. And with the SPX down as a whole, it's only going to bring indecision inside the crypto markets. With this being in the height of the bear market, it's important to understand that what the bottom is going to look like is going to catch a lot of people off guard, and most people are going to miss it. And so we shouldn't be looking so much focusing in on that exact pinpointing bottom. What we should be looking at is the overall trend. And what we can see is the overall trend is down, obviously. Now, a lot of that has to do with the fact that the SPX had a significant pullback. The SPX, from the range highs that we made, were down about 9%, 8.5%. From the high that we made up here at about 4,300. Now, the move to 4,300 was a big move. Keep in mind, guys, that the same 50-day moving average that we're going to be looking at on all of these charts, we're also going to be comparing it to the SPX. We can see that it has equally been a strong range, and well, I should say a strong trending indicator throughout this entire period. Yes, there's periods where we go below, but nonetheless, that happens with every indicator. We can see here that the second that this really became resistance, all throughout this period here, we can see that we've pretty much trended right around this moving average. Resistance is right around this average. We do temporarily hold support, but anytime that we've managed to fail support, it once again starts trending in the downward. And so that's kind of the way that we've been watching this play out so far. We have trended very consistently with this moving average. Any support that we've had instantly becomes resistance, and then we continue to trend down. Now, most recently, if you guys notice, this big move that we had off of the range lows at 36 ran up to 43, and we had this pullback. Now, originally, I was watching for us to bottom somewhere up around here. This is where I was watching for a bottom, anywhere from about 42 to about 41. In fact, this was unable to bottom, and we could see that right here. We did make an attempt to bounce. This got rejected, and then we sold lower. So my first area of demand wasn't able to hold. We actually managed to close back below this and became resistance. And so we're still below our previous support, our previous lower highs that we made in here. We're still below support. Even our move that we bounced up in here, it still rejected off that resistance, and then that resistance once again was too strong. We fell all the way back down. So now we're at this point where we really need to decide the direction of the market. In my opinion, where we're at right now is pretty much our last line of defense for the bulls. Technically, we're below the 50-day. We still have plenty of price action to wait. We could consolidate here. We could peak back below or above. We're going to have to watch and see. But at the end of the day, I honestly think that this 50-day moving average is going to prove to be that decision point. If we can't close above, we get rejected. This is going to set for another big drop back down to those range lows, at least to 36, 3,700. That's what I'm going to be watching out for with the SPX. But in that same sense, let's say that we have this moving average here, and let's say that we kind of consolidate and we get back above it. If we get back above this moving average, in my opinion, that sets us up for at least 42, and we could easily have a move all the way up to 45. I wouldn't be surprised to see that kind of play out, because if this just ends up being some type of a support and resistance flip, then we still have some highs to take out up here at about 45 and 46.5. So that's kind of what I would be watching this. This is how I'd be playing the market. Keep in mind, it's not going to go in a straight line like that. What I would be watching for, if we bounce off of this, if we're unable to get above 42 and this becomes resistance, I would be looking at this as nothing more than a lower high before we go much lower down. Now, keep in mind, if this ends up flipping and we start trending back up once again, then I would be expecting a move upwards of about 45 to about 46.5. These are really the big things I want you guys to pay attention for. Have this 50-day moving average draped over your charts, because this is going to kind of decide the trend, the short-term trend at least, that the crypto markets and the stock market is going to take. Overall, the stock market's down, the crypto markets are down. With the stock market and the SPX being right at this 50-day moving average, this is kind of our line in the sand, bullish above, bearish below. That's kind of what I'm going to be watching for here. But at the end of the day, we bounced off of our previous support. It's resistance. We're below previous support. It's acting as resistance. Technically, but we're below the 50-day, acting as resistance, but I wouldn't consider that, any confirmation yet. We're going to watch and see. I'll give you guys some updates here as we go, but this is what I'm going to be playing out from here. This is kind of the way I'm going to be looking at my analysis moving forward. Now, one other thing that I want you guys to pay attention for, we talked a little bit about this a lot. We've been talking quite a bit about the US dollar index, and the reason I've been talking to you guys so much about this is because this is ultimately going to dictate the trend of the stock market and crypto. If this market is up, the stock market and the rest of the markets are going to be trending down. It's simple as that. Strength in the dollar means weakness in equities. It means weakness in crypto markets. Means weakness throughout. And so the big thing that we've all been paying attention for, that I've been trying to get you guys to pay attention for, is the fact of the matter that this is coming to be a multi-year top. And this is kind of what I've been watching for a while, but this is going to be a multi-year top since the 2008 financial crisis. And this is coming for the dollar. When we're looking at this chart, this is a clear 5 impulse waves. 1, 2, 3, 4, and we're working on wave 5. We can still go up higher in here before it's completed, but nonetheless, this is wave 5. We are in the completion of wave 5. Wherever that takes us, whether it's here, whether it's a little higher, doesn't matter. That's not what's important. What's important here is to understand that we have been in a long-term downtrend inside of the dollar since forever. These are lower highs and lower lows as we're continuing to trend downwards inside of this big sort of channel, right? Now, when it comes to watching this, understanding that we're in a downtrend, understanding that since 1971 when they took us off the gold standard, this is a negative chart, and it's only ever going to be a negative chart, considering the fact this is only going to continue to hyperinflate. There's no scenario where the dollar just magically starts going into a brand new uptrend when its entire history is it being hyperinflated, it being a snake that eats its own tail, right? And so a lot of people, I've seen them drawing this chart that it's going to start breaking out and just go into this massive move. And I just ask you guys, why? What is it that makes us think that this dollar is going to have such a massive move, considering the fact everything inside of our economy is screaming that the dollar should be collapsing right now? And of course, a lot of people could say that since the 2008 financial crisis. But at the end of the day, we've had a lot of quantitative easing that have been taking place. What's interesting is we've gotten taken off the quantitative easing right here, and we've seen the dollar really start to explode in value, as quantitative easing meant that the rest of the markets no longer were getting new stimulus. What happens when the normal markets aren't getting stimulus? Well, liquidity dries up and the prices trend down. That's why we saw crypto go down. That's why we've seen all of these markets go down. It's because quantitative easing started here, ended right here, and we can see that the 2008 financial crisis, if we're looking at the stock market, that was the exact bottom. And the beginning of this entire bull trend was right here. The moment that we began quantitative easing, it created this entire move right here. The second that quantitative easing stopped was right here. It started here, it ended here, right? And so with the dollar, we're seeing a little bit of a contrast here. It started here, the dollar starts doing good, right? The dollar starts uptrending. It's been uptrending since 2008. Well, we stopped quantitative easing here, and the dollar actually went up. When the stock market went down at the end of quantitative easing, the dollar actually went up. And that's why I believe that with this being 1, 2, 3, 4, and us being in this wave 5, with the quantitative easing ending, I believe that this is a deviation. And this is going to be kind of like when you see a bearish divergence, right? When the price structure is trending up, higher highs, higher lows, like that, right? We see that the trend is up. Now, what happens with the RSI? We see higher highs and higher lows, but the RSI makes a lower high, right? We see this on the RSI. We see this in price. Price is going up, RSI is going down. That's what's called a divergence. It's divergence in the bearish sense. When you're seeing higher highs and higher lows and the price is going up, but the RSI and the momentum is trending down, that shows that the momentum is about to shift and we're going to get a trend reversal. The fact is, quantitative easing stopped. The rest of the markets are pulling back and we're seeing the dollar absolutely ripping. The reason the dollar is ripping is just simply because of the fact the rest of the markets are going down. Because the stock market's going down, people have to sell their stocks, and what are they going into for safety? The dollar. That's why we're seeing this big rise in the dollar. And it's happening right after quantitative easing stopped. So the only reason this chart was really trending up was because quantitative easing. Quantitative easing started right here. They literally started printing liquidity to stimulate the economies because we were in such a down period right here. They needed to save us from the 2008 financial crisis and the bank run that was going on. That's why we saw the dollar going up. Well, quantitative easing stops here, and then we see the rest of the markets pull back. Everybody sells their stocks to rush into dollars as a safe haven, and we see the dollar rise up. Well, I find that this is all very interesting because if we remove our drawing tools here, we know that this is a 1, 2, 3, 4, 5. We're in the completing stages of our wave 5. Well, let's look at this. All of this is also creating a bearish divergence. We can see that our high here, we have this resistance here. This was the highest high that the RSI ever made, all the way February of 2015. But we can see here that even though the market's making this brand new all-time high and we're breaking out and making this new move into wave 5, the RSI is still below this high. That tells me that not only is the bigger picture showing divergence, that this pump up on the upside is merely going to get faded, it's nothing to be trusted, but the big picture is also showing that the dollar is getting ready to start its brand new downtrend, right? We've been in an uptrend in the dollar since the 2008 financial crisis. If we're looking at the stock market, the 2008 financial, goodness sakes, the 2008 financial crisis and this entire bull trend started here, ended here. This is a huge cycle that just played out. And in my opinion, we're at the very close point of beginning the next major impulse. All of this has to do with the dollar chart. Now, when we're looking at this chart, we can also get into a shorter time frame. Let's get into a weekly time frame and look at some things. Not only do we have that very major bearish divergence that's playing out on, 6-7 year basis, but we also have this massive divergence that's playing out in the short term. Keep in mind, markets can stay overbought and oversold for given periods of time. This could make another high and still be below this resistance. So it's not like this is going to top right now. We don't have confirmation by any means. But we're getting tons of bearish divergence that's forming in here on the short term. We have tons of bearish divergence that's formed here on the bigger time frames, a big lower high over a 6-year basis. And then on top of that, we're literally in a multi-year downtrend since my dad's been alive, literally since the 1970s. We've been in this multi-year downtrend. Everything is telling us that this is not the end of crypto. It's not the end of the stock market. In fact, it's actually at a very big pivot point of the dollar about to start a brand new downtrend. So it's hard to say what will happen with the rest of the markets. My guess is the rest of the markets will do good. If the dollar's not doing good, people are looking to invest into other things. In my opinion, that means the stock market will look attractive. Maybe we go for a deflationary period. What if the dollar collapses and the stock market also collapses? Well, in my opinion, that's just the Great Depression 2.0. So there's only so many things that can happen. Personally, I don't believe that this is going to be done. I believe that the stock market is going to at least make one more new all-time high. We'll get one more big cycle before the whole thing's done. I'm not sitting here thinking that the whole world is bearish by any means. I don't think crypto is bearish by any means. I still think that the potential of a lower low is here. Don't get me wrong. I pinpointed that out. We're still below the 50. The trend's still down. So once again, we should still focus in on that. If we're comparing it to the last cycle, the time frames are stacking up that we could see one more sell-off that takes place. But even if that sell-off takes place on the multi-year basis, the dollar's about to top. And in my opinion, this is really going to set the stage for mainstream adoption of crypto. We've been watching crypto kind of beginning its stages, watching for adoption. Institutions have started adopting it. Corporations have started adopting it. Governments have started adopting it. We're at this point where, in my opinion, crypto is right there ready to just be mainstream used by the masses. What we're waiting for is the collapse of the dollar. And in my opinion, we're right there. This is a multi-year cycle top of the US dollar index. When this takes place, even if we just go like this, for years and years and years, and just slowly trend down like this, and do kind of the same thing that we've always done, even if we do that, where is this money going to be going? It has to go somewhere. Well, the stock market is an obvious place for it to go to. Real estate's an obvious place to go to. But the real estate market's kind of up a lot. I mean, I still think we need to pull back there. I honestly think that this is really setting the stage for a lot of this money to go into the crypto markets and for true mainstream adoption to finally take place. I've been talking about it. We've all been talking about it. We all know that there's going to be a point in time where the mainstream adopts crypto. We get this big retail cycle. Everybody goes into crypto and the blockchain movement. It becomes the future of everything, right? We all know that there's going to be a day or a year or two or whenever that period actually starts to take place. However long that takes place and how long it takes to happen, I don't know. But what we're looking at the dollar is a multi-year cycle top that's about to be playing out. In my opinion, we're going to look back 5-10 years from now. We're going to look back and we're going to see at this point where we knew that the dollar was about to top. We're going to look back at this point and say to ourselves, man, that was literally the beginning of mainstream adoption for crypto. The dollar topping right there was the beginning of true adoption for crypto. And I honestly believe that. And that's what I'm going to be looking forward to over these next few years. Not bearish on the world by any means, even though there's volatility in the short term. If you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing updates. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. For the people who like to sign up for my VIP course, Signals, follow all those trades that I take over this cycle. All of my expert picks as we're venturing in. There's really going to be one ecosystem I'm focusing in on over this next cycle. And if you guys want to know what all those cryptos I'm buying are, I'm going to be doing that inside of the Discord. So if you guys want to get access, links are in the description. Go ahead and sign up. Thank you guys so much for tuning in. And with that being said, I will catch you in the next one. As always, peace out.